Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, December the 1st. The year's 2021. Let's talk trading. It's time for the monthly open, and this month we're going to focus on keeping it simple. As always, these videos are for educational purposes only. Your results may differ from mine. Okay, it's a new month. Let's remember to keep our risk management in place so we don't lose any more on any one particular trade than we're willing to lose. Now, that being said, sometimes things happen like yesterday. In fact, I was talking to a trader on the phone, and when the pound dropped on our particular broker, price froze at about 40. And then next thing we know, it was down to like 25 or something. There was a pretty big drop there, and basically blew through his stop loss because um, they didn't honor it. So he's going to see if he can get his money back, at least to the stop loss level. But that's just one of the things. Sometimes in trading, you can do everything right, and something that can happen that's outside your control. Power outage, grid down, server down, whatever. And the next thing you know, you get out with a loss if you happen to be on the losing side of the trade. Then again, had you been short, you could have maybe you had your TP there, and you would have seen an extra huge gain because you probably wouldn't be calling the broker up and go, hey, you know what? You gave me an extra 15, 20 pips, and I really don't deserve those. I don't think there's many phone calls like that. So anyway, and since it's the beginning of the month, let's just, go over the brain management, the psychology. Let's not have any FOLO, FOMO, ROMO, ROGO, or ROBS. Um, because if you're experiencing pain, it's not coming from the market, it's coming from your reaction to the market. And when the market smiles upon you and gives you an opportunity to take profit, make sure you take some profit before the market takes it back, because it can and it will. And just remember, when you win, it's luck because you don't control the outcome. Looking at the monthly chart, we opened below the pivot point. And if you notice here, I updated the mid dots indicator. So I'll be posting that. So it'll display it'll actually put the labels here along with the pips that the price is from that level. So it looks like we've got 92, 91 pips to the upside to take out that monthly pivot for this month. And we're putting in the opening range for the month right now. We've already put in the opening range for the week, and you can see we broke out the bottom, but now we're back in that opening range for the week. And just so you know, we're 27 pips below the weekly open. That was a nice short right there. Actually, I was short above it, but I didn't stay in the short. But we'll get to that in a little bit. 112 pips off the yearly low, 336 below the yearly open at the time, and we're 11 pips above the daily and monthly open right now. Inside bar action, we do have some, just not on the pound. We might get some today, though, considering what yesterday looked like. We might have a new inside bar today. Range, only 76 pips right now, but we do have 2, 5, 8 pairs over 100 pips in range. And as I mentioned before, that weekly open, you can see here price touched, bounced, and then came crashing back down. But we're still above the daily open here. The rats, red rats had a chance to feast, green rats almost. And talking about the pivot, let's see, near S1 bias is long. We did touch the pivot, took it out and went long. So the pivot trading plan proved to be profitable. And just in case some people were wondering, here's the TRO pivot trading plan. It's not something I invented. It's something I saw on the internet and I just coded it up and put it out there for free. Okay, 3 missed pivots last month. So maybe we'll take some out before the year's out. I don't know. It looks like last year we had 6 missed pivots, so we got 4 this year. So let's just see what happens. In and out of the upper and lower wick zones today. And we looked at the range in yesterday's video at the weekly wrap-up, so everything's going to be pretty tight here. Let's see, high minus close 43, close minus low 33, pretty much the same for today since today is the open. High minus open 56, open minus low 20. So buy zone traders and rat traders both had the potential to make profit. Looking at the price action simple, chart set up. We've got the wall mall lines, which is sweet spot goal lines. Here we got a long trigger at 33.10. Which that would be a nice trade to take. Even though it is lunch line, you can see here, lunchtime, we went across the lowest high here at 33.03. And prices moving up nicely here. Whoops, we're not ready for that. Okay, I was talking about keeping it simple. I was talking with Walmart today, and let me switch over to the M5 chart so you can see it. I was short up around here, and then I got out with just about 3 or 4 pip profit. What I did was I put a 2 pip trailing stop on the price, and of course it ran up, took me out, and kept going down. So I was thinking there's probably, a little bit better way, because Walmart was challenging me. He says, you got to decide what you want to do. Do you want to go for the big run, or do you just want to take 2 pips, be happy, and just keep doing that over and over? So, we were discussing different ways to exit. And so my thought was, why not put on the highs and the lows and turn on the show only not crisscross? So we did that, and we looked at price. And so as price was going down, we were saying, okay, we would wind up getting out at this level. Then we would wind up getting out at this level. But then price dropped all the way down here, almost took us out, came back down again. And so what I decided was, rather than wait for it to hit the high, let it hit the open. If it hits the open, meaning if in this case, these are all sellers, if the buyers push it all the way back to the open, they pretty much, what I like to call, covered that candle. So that's when to get out. So right here, let's see, this was the open. So right there is when it would have been triggered out. But actually right here wasn't open. Price went down and probably would have triggered out here. So that's what we're looking at here. So basically it's the TRO HL5. I've got some of these turned off just to keep it simple for now, and we can build this up as we go. TRO HL5, it is showing the lines, it's showing the open, high, and the low. And then what I did was I came down to, where is it? I set it to the current period. I set 100 bars, which is probably more than enough. And I turned on the only show not crisscross, set that to true. So as you can see, this high got crisscrossed, this high got crisscrossed, meaning broken through. It started on one side, came across the other. I guess in a way, crisscross would probably mean it started on one side, came across the other, and came back down, but that's the way I have it. Maybe I should say only show not breached or something to be technically more accurate. But anyway, I think you traders know what I'm talking about. So in this particular case, as price is moving up, if you got in that trade at that lowest high right here, as soon as this candle closes in the next 45 seconds, you'd move your stop loss to the open. And so you'll see the open line print in a few seconds here. So right now, if you got in this trade, you'd probably be up about 8 or 9 pips. See, that high was 03. We're at 12. Yeah, you'd be up a good 9 pips. So it just took out another open. Got a few more seconds to wait. Now, the thing is, the idea of keeping it simple is that it's not going to be, say, the most efficient or the optimal, but it's going to do better than you're going to do through intuition or seat of the pants or coin flips or whatever, just that simple algorithm. So right now, you've got your stop loss set at 10. You were in at 3, so that's 7 pip trade. I'll take that all day long. If every trade was 7 pips, I'm sure you would too. And so you just wait. And at the end of this 5-minute candle, it opened at 12.9. So if it closes somewhere above that, that's where the stop loss would be moved up to. So once again, very simple. And you just have to wait. And sure, in this case, maybe you give back 3 pips. But by giving it that much wiggle room, sometimes it might come down in the middle and shoot up or almost touch and reverse. So you just let the chart dictate your entry and exit in this case. So we're looking at, in this case, the lowest high, and then as price moved up, we'll put your exit at that open. Now, if you're wondering, well, where's the stop loss, TRO? I showed you earlier. Stop loss is a function of position size, right? And it's also a function of your risk, right? And so let me just bring that chart. So stop loss, risk, position size. Because if you keep your position size the same, then your stop loss is always going to be the same. And that's okay to do. And so you can see here prices going back and forth across that open. So you might say, well, what if it closes below that open? Well, then your stop loss would still be here. So, fellow traders, it's not what you trade, it's how you trade it. Drain the banks. This is the Rumple.